puts, options, trading. A piece of the stock market puzzle. For some people, maybe it's the only piece that they play with, so maybe they miss a bigger picture. For me, it is a very important piece, but it is just a piece of the puzzle. Put options, in my opinion, are an undervalued tool of the stock market because their most valuable contribution is not mentioned often. And what is that most valuable contribution that a put option could give you? I'll tell you right now. A put option? Stock insurance. Buying a put option gives you the right to sell an asset for a predetermined price, known as a strike price, in a specific period of time, which is the expiration date. It literally is an insurance policy. Let's take a look at this next slide. If you're looking at the SPY, right? Let's say you notice it's kind of bouncing up here, starts coming back down again. Let's say you get worried that it's going to crash through this resistance line. So you decide to buy a put option at 418. So your insurance policy is at 418. As SPY crashes down here, you got cashed out at 418 when the market's trading down here around 380. Insurance policy, my friends. When you buy a put option for insurance, the risk is the premium paid. Whatever amount that you pay for that insurance policy, you're going to lose that. And you're hoping that if the stock doesn't crash, but if it does, you're gonna cash out at the strike price, which in that example was 418. You can also buy a put option for capital gains. The risk is the premium paid, and you're hoping to sell the option before expiration at a higher price. Let's take a look at that. So let's say you saw it crash down here or whatever, go down here, you see it bounce back up, you see it's hitting some resistance around here, starts moving down, you buy a put option around here, and then you were accurate in direction and you're hoping to sell it down here at a higher price. However, there's some other factors called the option Greeks. So just because you're right in direction doesn't always necessarily mean you're profitable when you're buying. Another thing that you could do is you could buy a put option spread for capital gain. The risk is the premium paid, and you again hope to sell before expiration at a higher price. So what you're doing with this is you're minimizing how much premium you're paying. And the way that you're doing this is you're buying a put option which money is flowing out, at the same time you're selling a put option which money is flowing in. So you don't have as much money rolling out for that position. Same thing, you could buy a put option spread somewhere around here, and you're hoping to sell it down here for a higher price. However, as I mentioned, there's these option Greeks that can come into play. So just because you're right in the direction doesn't always necessarily mean your position is profitable. You can also sell puts for income. However, the reward is limited to the premium that you bring in, and the risk depends on the specific put strategy. To go into some details, I'm going to plagiarize someone else's video and edit and put it in here, and hopefully I don't get any copyright strikes against it. But if you see this dork around YouTube, tell him I'm stealing his videos. So what are some ways that we could sell put options? There's 4 basic ways. Cash secured means you have the money to buy the asset. Naked means you don't have the money to buy the asset. Margined means you need to borrow money from your broker to buy the asset. Put spreads would be buying a put option, selling a put option, at the same time buying a put option for protection. Those are the 4 basic ways to be selling a put option. So what should you start with? Cash secured put options. Start with cash secured put options because they give the least amount of risk with proper stock selection. Now somewhere up here there should be a link to a video that I made about fundamentals of how to select a stock for cash secured put options. Go ahead and watch that after this video. Let's take a look at this and talk about some of those strategies. If you're selling a cash secured put option, depending on exactly what it is you want to do, you're kind of safe selling it anywhere. depending on a few factors. Now, a naked put option, you probably should be selling it when it goes up. Margined put options, ooh, that's a wild beast. I would probably stay away from those if I were you. And spreads, same thing. Do it on the way up. So what's the easiest strategy to start with? Selling cash secured put options, my friends. Cash secured put options all day. At the end of this video, there's going to be a link to a different video specifically on selling cash secured put options for some moolah. Watch that, see if you like it. If it's something you like, learn how to do it. In the meantime, I got a freebie for you. 3 underused tactics to transform your financial results. Start taking advantage of these powerful success tactics that YouTube isn't really talking about the same way I'm talking about them. Just go to your handy dandy ihavesuccess.com website. Find this part, which will be overly obvious in your face. Enter your information in there, get it, and start taking advantage of it. With that, ladies and gentlemen, you have a fantastic day. Leave a comment, like the video, subscribe, and let me know what's going on in your life. Aloha.